I'm David Schneider, your trusted estate planning attorney, and today I'm speaking with James Bean, SVN Investment Properties 1031 exchange expert, and he's going to talk to us today about rental properties. James, thanks for coming in today.
Thanks for having me, David.
Oh, it's my honor. Listen, a lot of my clients, they had homes in the big run-up of the values. They've moved to new homes. They've rented out their old homes. They're talking about this thing, 1031. I don't know what that means. Tell me, what's a 1031 exchange?
Well, 1031 exchange, the simple answer is it gets its name from the tax code, the Internal Revenue Tax Code. And it's a vehicle that allows people that have owned investment property for a significant amount of time, that when they want to sell it, there's a way that they can defer the tax of the capital gains that they're most likely going to recognize. And so that article allows them to sell that property, replace it into a different investment property, and defer those capital gains taxes. So your people that are doing what they're doing is actually pretty smart, because as you mentioned, there's significant elder population that have realized some pretty significant gains in the equity from their homes. And if they're married, they're only getting a $500,000 exemption on that gain. It could be $2-3 million to some of the people that I've spoke with in our neighborhood here. So if they move out, rent it for a couple of years, now it becomes an investment property. And they really need to do it for a couple of years because the IRS wants to see intent. So they need to show some paper trail that this has, in fact, been an investment property for us, and no longer a primary residence.
So when they're involved in this type of business, because that's what it sounds like to me, are they gaining money in terms of the value of the property, or they're depreciating the property? How is this working out?
Well, as soon as they have a full tax year of income, then yes, they can start a whole new depreciation schedule based on an investment property. And that's just really a question for a CPA. I'm not exactly sure if the depreciation schedule resets. But because they're now collecting income and they are using it as a rental property, and they want to do it smart. They don't want to rent it out month to month. They really want to have somebody sign a 1-year lease and then renew it for another 1-year lease. So again, that they're really showing intent that this is an investment property. And after 2 years, they can sell it as an investment property and then use those proceeds from that sale and reinvest it into another, to where now they're getting some really good passive income, and they defer all those capital taxes. So they're literally retaining and saving all that equity that they built up.
Now, I've heard that people that have these rental properties after a couple of years need to move back into the property in order to recognize the gain. Is that
No.
something that's
not true.
That's not correct?
No.
Okay, that's great.
In fact, they don't want to do that.
They don't want to move back into these properties.
Right.
Okay. This is fantastic information. We've been speaking with James Bean of SVN Investments. James, tell everybody how they can find you and get more on this important information.
Yeah, so best way to reach out to me is through my website, which is www.best1031online.com. And you can also see me on all the social channels at 1031 Broker James.
I'm David Schneider, your trusted estate planning attorney. Thank you for watching.